Block cell. Block cell. Block cell. Block cell. Block cell. Block cell. Block cell.
Hello. 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 Hello, everybody. Welcome to the 21st episode of the Jingle Bell Show. We have FOMC meeting today. They're gonna be shenanigans, and we're here to watch it live and screw it all up. Yeah, today we are streaming just the price ladders because you all have charts, right? Doesn't matter what you use. When they're gonna get you, they're gonna get you. Okay. Is my voice clear, audible? Everything set up? Okay. Sound check good. That's great. Oh, my jingle is few text trade. Oh god. No, today I'm gonna show you like there's no difference. Like you trade charts or the DOMs, when you're gonna fuck it up, you're gonna fuck it up. No sound. Jungle. There should be sound. It's coming out of my software. You gotta better check your own computer. Okay, what do we got? I have no idea. I think we rip. 44. 63. What do we have? The decision comes up in 4 minutes, and then we have the Powell speech. Why so many numbers, Jing Jing? Just to confuse us all. As I say, if our heart is not pounding, we don't have a position. Wix is on the move. Calls I got. My heart pounds for you, Jing. Stock Puppy's here. How are you, Stock Puppy? Oh god. Here we go. 1 minute. Boom boom. Still nothing. Stopped. Okay, let's read what's it. Fed anticipates ongoing increases in interest rates, 12.0 for Fed rates action, 75 basis points to 225. Don't fuck me over again. Holy Christ. Come on. I'm gonna take one off and we'll let the other on. 72. Let's do this. 69 to 72 is kind of a support. So the price has to bounce. This is where it has to be, or we're gonna see a good sell wave. So that's it. We can take off our stops. And let's see what the market does now. What do we got? 69 quarter. Okay, what do we have? What the fuck, you were short? Yeah, I was short 80. I shorted 81 a little bit too early. I was leaning on 86. They like went up, cleaned it out, and then back again. When they were coming back again, then I shorted 81 again. I know it feels shitty because I could have been stopped like 2 times in a row, but we got our move. I had a little bit more contracts when it was going up, so we lost like 600 on the first trade. We made like 400 on the second one. Chat Jingle. What platform is this? This is Jigsaw. Jingle, what the fuck? Okay, Stock Puppy, just like everyone else. Stock Puppy is gonna get trapped and he's gonna get swooned if 69 goes. I just put this diamond sales on today and I find it so distracting. And just like the price ladder is fine for me. Just scalp. Okay, that's a nice break. 71. Okay, bought it. Just trying to scalp. If we can get a little bit move back to, but no, we're gonna get stopped here. Let's do a second. Can we get a move back to 74? Come on, push. Oh shit. Okay, jump. I'm taking one off. Okay, like, can we get 77? Give me 77. Come on, come on, come on. Push. Push, push. Oh god. Push. Okay, I'll take 76. Fuckers, fill me. Oh god. Okay. I hate bookmap with a passion. Yeah, man, like whatever. Say floats your boat, right? For me, the depth of market is just for execution. Like fast scalping is good with it. Like you can see like where you're wrong. Like all my ideas come from my charts, right? A 5-minute chart, my footprints, my market profile. That's where the levels come from. And we did not even get to 77. Okay, let's see what we got. What's a footprint? Oh god. It's just like this. It's you see the ask and the bids here. So this is just like what happened last, what prices traded. So it's just like the footprint kind of stores the bids and the ask together. Like you see the volume profile here, like the 12,000 contracts. So footprint will give you kind of the breakdown of how many bids and on the offer those contracts were traded, whether it was 7,000 on the bid and 5,000 on the offer, or like how it traded. I mean, it's a lot, but like, you know, when trading is so fast, like you don't use these things. Like you see so many numbers now, like I can't see all of them at the same time. I just focus on like 3 or 4 numbers. All I'm focused on is the shape of the volume profile. I'm seeing the levels I'm interested in from my charts, and then I'm seeing like is there stacking and coming in? Is somebody willing to buy those prices or not? So yeah, it's quick, man. I'm not that fast. I'm still working on it, still a work in progress, but that's what these price ladder traders are doing. I like it, Jingle. Yes, Cloudy like made a comment. I appreciate it, brother. You said your favorite show. Thanks, brother. I hope you guys enjoy a little bit of the streaming I do. Normally, like these kind of events are nice to stream because there's a lot of things happening, you know. Otherwise, like last Friday, I streamed one and there was nothing. The price action was so bad. I got tilted on that. I was trading 100k sim account and I was up like $1,200. And by the time I closed it, the sim account was at 18,000. I loaded on like 500 lots. Oh god. Yeah, man. How can someone not love the jingle show? I appreciate it, brother. Sometimes the market just sucks. Yeah, like no volatility. Like who wants to trade it, right? Even now, like still the market is consolidating, right? There's no move. Still in the 10-point range. 90 to 68. We got a 20-point move. The CPI, the last CPI was something. Oh god. The 5-minute candle on that chart was even the biggest candle in the 4-hour chart. That's the move we got in those 5 minutes. It was wild. That 100-point drop. Yeah, man. Like, it was, I remember it trading around 38.40 and it wicked 72 in like 1 minute and it straight away dropped 110 points, 120 points in like 3 minutes. Wow. You see that? Okay. What's going on? Market's going back up. I still have like confidence on the short side as long as it stays below 85. Yeah, if like a candle closes above 86, that's problem for the bears. Damn, you caught that lol. Oh god, that was crazy. That was crazy. TPI. Stock puppy told Jingle to buy 69 and then rip to 40.10. And I bought 68. I think 68, 69. We bought in that area. And that was a good call, stock. Jay's choice of tie will break support. Isn't that funny? Like how people like make shit about his demeanor and what he's wearing and how he's wearing, and then has no effect on. $78. What's the market up to? 82. Okay. I always feel like people who are buying, right? It may be the right thing to buy here, but like considering how the day has been, it's so difficult to buy when it's pushing into the resistance. I could never like catch a moving train. I would always end up under the wheels. And that's something I want to change in my trading, but it's tough. Okay, so 76 to 77 is kind of the pivot in this zone. Let's see if it can stay above it, or if it breaks below, then we'll see what we're gonna do. 75.50. There's some buyers coming in, pushing prices. There's some good positive delta in 79 to 81. Let's see if they can hold and push prices up, or VIX is just dying. Do we get? I had like no space today to put up a shitty 5-minute chart for the stream, so I was like, oh fuck it, I'll just show my setup. This is what I use on one of my screens for just the ladders. Mainly when I have a trade to do, I will look at that. Like free time, I'm not watching this all the time. I'd rather watch a 30-second chart lol than this bullshit. Like when you're in the trade, it's helpful. You can see like the ledges and the value areas right here if you're leaning against it, and you can see where sellers kind of started initiating. $85. You have good access on the profile above 85, like this right here. $85.25. So this is all like the spike. You can see no volume traded here, nothing. Are you trading levels blind sometimes too, or are you waiting for specific? Depends like what I'm trying to do. Like the simple way to get levels is you have your VWAPs, right? And then there's some creative ways to use the VWAPs. You can try that. And then we have the market profile. That's all you need to have an idea of what the market's trying to do. And then rest is just watching shit, on the price ladder if you want to do that, or the footprint, or even a 1-minute chart. You want to see what kind of price action you want to see. For example, if you like 85 was a level, 84 to 85. So whatever you wanted to see was like no volume trade there. So whether you look at the price ladder or you look at a 1-minute chart, it's the same thing. You'll see a wick. Like that's all what you want to see to be in that trade and remain in that trade. And if that like 1-minute candle closes above that zone and the second starts even going higher, you're fucked. So whichever way you want to connect it to, whichever thing kind of works for you. For me, it's like combining all the things. It's like, okay, what does that wick look like on the price ladder? We know this looks like it. So when you watch the price ladder a lot, you kind of know how the chart looks like. You kind of know how the trading has been on the day, looking at the volume profile and stuff. So it's a good exercise to watch the footprint, watch the price ladder, and like a small interval 1-minute chart or a 500 tick chart. You'll get to know very quickly like how the ledges are formed, and it's just basic volume profiling. Nothing like too crazy. Like when I use it, I'll take a glance, then I'll stop watching. Yeah, otherwise like 100 reasons to get in there. Yeah, exactly. Like, the more things you use, the harder it is to take a decision. So when it comes to execution, you just stick to one thing, and then when that thing flags you good or bad, you stay in the trade or you get out of it. It's very hard to do. I still struggle with it. Okay, Delta says thank you. No problem. You're welcome. Yeah, just play the probabilities, right? It's hard. Like we're not designed to make that many decisions at a time. If you're in and out of the trade so many times, it's better to make an algo, because algo doesn't get decision fatigue, but we do. Easy to just hit and run. Yeah, like put in a trade where you want to put it and put in a stop where you think you're wrong, and then see. But yeah, we're human beings. It affects us. What do we have here? Anything else from the Fed? US Treasury yield 3-month and 10-year curve steepens after Fed's hike. So that's kind of good for growth. WTI climbed $3, trading at 98. Now it's 97. It's reversed a little. How's gold? Bonds at resistance. Gold is trying to go higher. Okay, we have a like sweep to the downside here. Just let's see, 77. Jingle has COVID cough. No. It's just people in the background. Yeah, Stock Puppy, I fixed the cough. Oh god. What do we have here? Any trade ideas? Like, I don't see shit in this. Like, I can see like shit tanking below 75.25, like this zone. Short. Let's see if we get anything. I suck in this trade. The continuation trades. Like, I'll do everything, but I would not put a sell stop here and then like let the move continue. Just wouldn't do that. I always want to fade shit. So bad. Oh god. Thanks heaven, I was worried, Jingle. No worries, Poppy. Did you catch any other trend today? No, I didn't trade today. I was just like yesterday I said, I was busy with my shit that was happening with my account at one of the funding companies. And I was pissed since yesterday, so they said they'd give me a call today, and they called and they said, okay, we're gonna fix it, blah blah blah. So I was like, and there's like shit going on. I don't trade because I've seen it ends up fucking things up more. Sorry to hear. Yeah, it's crazy, man. Like how anti-trader friendly rules some of these companies have. I hope we get some of the good companies, because like they want to make money off traders just like losing money. We want companies that want to make money from traders making money. Yeah, but it's hard. Like, yeah, but it's a good test too. Like in the beginning when you're trading, they make you trade with all these rules, so you're extra cautious, you're hard. So eventually after a few years, when you actually get good at this, you trade better. So do you recommend Apex? Yeah, Apex have been very good to me. I hate their trailing drawdown. I wish they had end of trading drawdown. But it's just really a problem till you make the first, let's say, $5,000 to $10,000. After that, it's good because there's no daily loss limits. So as your account gets big, you can trade it. How long you've been trading for? Oh god, maybe 18 months, like regularly futures trading almost now. Since COVID, I've been like fucked by the markets. Earlier, before, I was just doing my normal shit, didn't care, just buy some SPY shares and chill. Then COVID hit, got screwed over, and then I had to think I want to learn this actually. And since then, it's been learning. I don't know, like, yeah, the game is tough, man. Game is very tough. Which funding companies are you using? I've used like almost all of them. Blown up with almost all of them once or twice. But I do have current accounts with Lilu, I have with Apex, Bullnox, like 2 or 3 accounts with them. With TechTrader, I signed up. Somebody told me like, yeah, give them a try. They're all the same. Like there's like few things different in that or that, but like the thing is like The different things I'm trying, like people want to know that, like, because the game is tough. People usually end up losing all the money they have and they still want to trade somehow, to learn the thing, and then it gets tough. But like with these, even if you spend like 2,000, 5,000 on them, it's better than blowing up your down payment. But at the same time, you don't want to get lousy with these companies and like end up losing too much money to them, because then you can just get careless, and that like screws up the trading as well. Okay, we are trying to push here. 77. See this ledge right here? See the reaction if the sellers are selling. Want to sell here. Pushing. Backing off. See if they can continue it. Lots of stops in these areas. You see the excess here. Let's see if they test it again. VIX is just tanking. The challenges with some of the funding companies with like live trading drawdown is like, let's say if you pass a 50,000 account, they give you a $2,500 trading drawdown, which is fine. But the thing is, let's say you want to trade that aggressively and you start trading 2 lots on the S&P, and you make a good trade, you short it, and the trade's going in your favor, you're up like 15 points. That's $1,500, right? Now it gets dicey. Like, do you take the money out or do you let it run? Letting the runners run is a huge problem, because let's say if the trade comes back now to your break even, technically like you are where you started at the day, like with $0. But since you made 15 points on 2 lots, $1,500, and you gave it up, they count that as profit as a part of your drawdown. So in the beginning, when you had like $2,500 of risk to play with, after this trade, you're left at the same balance, but now you just have $1,000 of risk to play with. That's the hard part. So you have to really trade scalp in a way where you take small targets. The only way to handle runners is to have it like 10-20% of your position stay micros. 1 to 2 runners. Yeah, that could work. I have always problem like holding trades with patience, because if you're looking for a 100-point move, 150-point move, 70-80-point move, it's hard to get it in one session. It takes 2 or 3 days to do it, and you have to hold your nuts intact while that's happening to see, because market will retrace front and back. That's another mental exercise. What's the market up to? They're making people so frustrated here, even the shorts, right? Here we go, push. Powell started speaking. Let me see if we can find it. FOMC meeting and put it here. Okay, let's go. I'm gonna turn this on. Audio.
backdrop, today the FOMC raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in the target range for the federal funds rate will
Can
be
we see?
appropriate.
Can you hear, Paul?
In addition, we are continuing the process of significantly reducing the size of our balance sheet. And I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
Okay. Do you want me to continue, or you want to hear
Recent
it at your
indicators
own
of
end?
spending and production have softened. Growth in consumer spending has slowed significantly,
Block
in part
sell.
reflecting lower
Okay.
real disposable income and tighter financial conditions. Activity in the housing sector has weakened, in part reflecting higher mortgage rates. And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and
Block
wage growth
sell.
elevated. Over the past 3 months, employment rose by an average of 375,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the
Block
wage
sell.
distribution, as well as for African Americans and Hispanics.
Block sell.
Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In June, the 12-month change in the Consumer Price Index came in above expectations at 9.1%, and the change in the core CPI was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary
Block
policy.
buy.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%.
Block buy.
We anticipate that ongoing
Block
increases
buy.
in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings.
Block sell.
While another unusually
Block
large
block
increase
sell.
could be
Oh, God.
appropriate at our next
Block
meeting,
buy. Block sell.
that is a
Block
decision that
buy.
will depend
Block
on the
block
data we
sell.
get between now and
Block
then.
sell.
We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to
sell.
slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and
Block
inflation.
buy.
Our overarching focus is
Block
using
sell.
our
Block
Jesus
buy.
Christ.
demand into better balance with supply
Check that shit
in order
out.
to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves
6850
Block
was a
buy.
bastard, man.
Inflation has obviously
Block
surprised
buy.
to the upside over the past year, and further surprises could be in store. We
Block
therefore will need
buy.
to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer-run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions.
Look at the
But such
speed on the
outcomes
price
are likely
ladder.
necessary to restore price stability
Jesus.
and to set the stage for achieving maximum employment and
Jingle
stable
Bell
prices over
my
the
stuff.
longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
This is where the FOMO comes in.
We
They're
at the
not going to
Fed will
hit
do everything we
4,000.
can to achieve our maximum employment and price stability
Block
goals.
Give me
sell.
a fill.
Thank you. I look forward to your questions.
Hi, Chair Powell. Thanks for taking our questions. Rachel Siegel from The Washington Post. Wondering if you can walk us through your thinking around the decision not to go for a full percentage point increase. We saw a ramp up after the May CPI report came in hotter than usual, and then obviously the June figure did too. Was there any discussion of a stronger hike at this meeting?
Block sell.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing
Block sell.
increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move
Block
than we
sell.
did today if the committee were to conclude that were appropriate.
Yeah.
That was not the case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times that we were prepared to move aggressively.
So much
more
wanna short
aggressively if
this.
inflation continued to disappoint. And that's why we did move to a more aggressive pace at the June meeting, as we said we would do. At this meeting, we continued at that more aggressive pace as inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times. As the committee considers the policy
Block
path
by.
forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we
The
are likely
5-minute
to
candle
see
is
some
obscene.
persistence in core readings in particular? And given that potential tension and signs
Block
of
by.
any kind of activity weakening here, how has the committee's thinking changed on how far into restrictive territory rates might need to go?
So I guess I'd start by saying we've been saying we would move expeditiously to get to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral. So the question is, how are we thinking about the path forward? So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to
Block
bring
by.
demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we
Block
expect
sell.
ongoing rate hikes will be
Block
appropriate
buy.
and that we'll make decisions meeting by
Block
meeting.
buy.
So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we
Block
seeing
sell.
the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand getting
Block
better,
sell.
getting closer. Of course, we'll be looking closely at inflation. You mentioned headline and core. Our mandate is
Block
for headline.
buy.
Of course, it's not for core, but we look at core because core is actually a better indicator of headline and of all inflation going forward. So we'll be looking at both, and we'll be looking at them at those both really for what they're saying about the outlook rather than just simply for
Block buy.
what they say.
Block
But we'll
buy.
be asking, do we see inflationary
I'm dying
pressures
here.
declining? Do we see actual readings of inflation coming down? So in light of all that data, the question we'll be asking is whether the
Block
stance of
sell.
policy
Block
we
buy.
have is sufficiently restrictive to bring inflation back down to our 2%
Block
target.
sell.
And it's also worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some additional tightening, significant additional tightening in the pipeline. So where are we going with this? I think the best I think the committee
Block
broadly
by.
feels
Oh, fucking
that we need to
God.
get policy to at
the
least
fuck
to a
out of
moderately
here.
restrictive level. And maybe the best data point for that would be
Block
what we wrote
by.
down in our
Jesus.
S&P at the June meeting. So I think the median for the end of this
Die.
year, the median would have been between
Die.
3.25 and 3.5.
Die.
And then people wrote down
Oh, God.
50 basis points higher than that for 2023.
Fuck off.
So that's, even though that's now 6
Somebody
months old,
stop
this trade.
That's the most recent reading. Of course, we'll update that reading at the
Block by.
September meeting in 8 weeks. So that's
Block
how we're
sell.
thinking about it. As I mentioned, as it relates to September, I said
Come
that
on,
another unusually
sellers.
large,
You
increase could be
motherfuckers.
appropriate, but that's not a decision we're
Block
making now.
by.
It's one that we'll make
Oh,
based
God.
on
Block
the data
by.
we see. And we're going to be making decisions meeting by meeting. We think it's time to just go to a meeting by meeting basis and not provide the kind
Block
of clear
sell.
guidance that we had provided on the way to neutral.
I'm
Block
dead.
by.
So dead.
The Wall Street Journal.
Block sell.
Chair Powell, you've said that your policy
Come on,
works
die.
through
Die,
Block
die, die.
sell.
Yeah, go push.
and that policy needs to be at
Is
least
for
moderately
175.
restrictive, which
Let's
means you
go.
need financial conditions to stay tight. Futures market
Block
pricing
by.
currently implies you will raise rates
Block
this year
sell.
along the lines of your
Take them out.
June SEP,
Block
but
by.
then
Kill
lower
them.
a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times, what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate
Jesus
monetary
Christ.
policy response would be, I mean, of course, we do that in the SEP, but nonetheless, you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high. So again, I would,
Block
the best
sell.
data, the only data point I have for you really is the June SEP, which I think is just the most recent thing that the committee's done. Since then, inflation has come in higher, economic activity has come in weaker than expected. But at the same time, I would
Just
say
take
that's
a jingle, I
probably the
can't
best
watch.
estimate of where the committee's thinking
No,
is
I'm gonna
still,
fight this one.
which is that we would get to a moderate.
They didn't, like,
moderately
take it
restrictive
all of
level
my
by the
shit
end of
out
this year,
yet.
By which I mean somewhere between 3 and 3.5%.
But they are going to.
And that
1,
the
2,
committee
3.
sees further
I'm
rate
dead.
increases, in 2023.
No.
As I
Fuck.
mentioned, we'll update that, of
Block
course, at
by.
the
I'm
September,
dead.
Block by.
meeting,
Block sell.
But that's really the best I can do on that.
Oh,
So
God.
inflation had been a little bit hotter than anticipated. Has your view of the terminal rate changed since June?
Jesus
So I wouldn't
Christ.
say it was. I think we didn't expect a good reading. but
Yeah.
This one was even worse than expected, I would say. I don't talk about my own personal estimate of
Yeah,
what the
time out
terminal
now.
rate would be. I will write down that in. It's going to evolve. It's obviously it has evolved
Block
over the course.
by.
I think for all participants, it has evolved over the course of the year as we learn
There we go.
how persistent inflation is going to be. And by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of readings about economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data.
I want
and
this to
we'll make a
die.
decision at that meeting based on that data.
Hi, Jarrell. Thanks for taking our questions. Gina Smiley, New York Times. You kind of alluded to this earlier, but I wonder, in
Block
the event that
sell.
you see several months of very weak headline inflation
Block
numbers because
by.
oil prices
Block
are coming
by.
down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we confident that inflation is on a path down to 2%? That's really the question, and we'll be making.
Come on, let's go.
Our policy stance will be set at a level, ultimately, at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation
Block
going
by.
forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking. So it's something we have to take into consideration in our policymaking, even though our tools don't really work on some aspects of this, which are the supply side issues.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. Earlier this week, the president said we are not going to be in a recession. So I have two questions off of that. Do you share the president's confidence in not being in a recession? And second, how would or would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy, or is there some amount of contraction of the economy the committee would be willing to abide in its effort to reduce inflation?
So as I mentioned, we
Okay,
think
bye
it's
bye. Gonna buy a
necessary to
yacht now. Stock Puppy
growth
killed it,
slow
man.
down. And growth is going
Good
to be
job,
slowing
stock.
down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should
This
see some
sucks.
slowing. We actually think we need a period
This is my
of
last trade.
growth
Block
below
sell.
potential in order to create some slack so that the supply side can catch up. We
Block
also
sell.
think that there will be, in all likelihood, some softening in labor market conditions. And those are things that we expect and we think that they're probably necessary if we were to have
Block
to get
buy.
inflation, if we were to be able to get inflation back down on a path to 2%, ultimately get there.
The question was whether you see a recession coming and how that might or might not change policy. Thanks.
So we're going to be focused on getting inflation back down. And we, as I've said on other occasions, price stability is really the bedrock of the economy. And nothing works in the economy without price stability. We can't have a strong labor market without price stability for an
Block
extended period
sell.
of time.
There we go.
We all want to get back to the kind of labor market we had before the pandemic.
I took one
where,
off.
differences between
This is
racial
shitty.
and gender differences and that kind of thing were at historic minimums, where participation was high, where inflation was low. We want to get back to that, but that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply must do. And we think that
What's the PNL? Oh man, don't ask.
Trade-off with,
It's bad.
with the employment mandate. We see it as a way to facilitate the sustained
Down
achievement of
800.
the employment mandate in the longer term.
Howard Schneider with Reuters. Particularly in regard to expectations, it's been said the last few months that the risks
Block
of doing
sell.
too little outweighed the risks of doing too much. Does
Block
that remain
sell.
the bias?
So we're trying to do just the right amount.
Yeah,
right?
considering what
We're
I
not-
did,
We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. So, you know, I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have
Let's see if we can get a nice down rotation to the
sustained
downside.
strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
But as a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
We're trying not to make a mistake. Let me put it this way. We do see that there are two-sided risks.
Block
There would be
buy.
the risk of
World's
doing
coming
too
back
much
up.
and
Let's see if we can hold this
you know,
move.
imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions, when that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder and the pain will be that much greater. So I really do think that it's important that we address
Block
this
by.
now and get it done.
Thanks, Chair Powell. Neil Irwin from Axios. To build a little bit on what Steve was asking, do you believe the United States is currently in a recession? Will the GDP reading tomorrow affect that judgment one way or the other? And has your assessment of the risk of recession changed any in recent weeks?
So I do
Block
not
by.
think the U.S. is currently in a recession. And the reason
All
is
you
that
had to
just too
do
many
was
areas
fade
of the
this
economy
stream
that
and you
Block
would be
by.
rich.
performing, too well. And of course, I would point to the labor market in particular.
Block by. Block
Dead.
by.
It's true that growth is slowing.
Block
for
sell.
reasons that we
Block sell.
understand.
$2,000 in the
Block
hole.
by. Block
Extraordinarily
by.
high last year,
Oh,
5.5%.
God.
We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll
Okay, let
jobs
them
averaging
come.
450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening.
4029.
So, I don't think the U.S. economy is in recession right now. Haven't seen it, and we'll just have to see what it says. I don't. I would say generally the GDP numbers do have a tendency to be revised pretty significantly. It's very hard. It's very hard to accumulate U.S. GDP. It's a large economy, and a lot of work and judgment goes into that. But you tend to take first GDP reports, I think, with a grain of salt. But of course, it's something we'll be looking at.
Hi, Chair Powell. Victoria Guida with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those rules to have more teeth and to have sort of more transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening those rules in any way.
So those are the toughest rules in place, at any comparable institution that I'm aware of. We think, we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared, and
Block by.
the amount of trades you make will be they'll have to be 45 days or more before any FOMC meeting. It's just I think we've really created a very strong and robust set of rules that will support public trust in the institution.
Block sell.
Again, we're just now, the system is just now up and running, and I'm proud of what we did.
Hi, Katerina Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what kind of goes into your thinking for, making the decision on how much to raise rates, and, just talking about a very large amount that you alluded to, could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
So
Block by.
I'm gonna take that as a question about the next meeting and thereafter. So as I mentioned, we're going to be looking at all of those things: activity, labor market, inflation, and we're going to be thinking about
Block
our
by.
policy stance and where does it really need to be. And I also mentioned that as this process, now that we're at neutral, as the process goes on, at some point, it will be appropriate to slow down. And we haven't made a decision when that point is, but intuitively that makes sense, right? We've been front-end loading these very large rate increases, and now we're getting closer to where we need to be.
Block
So
sell.
that's how we're thinking about it. And in terms of September, we're going to watch the data and the evolving outlook very carefully and factor in everything and make a decision in September about what to do. And
Block
I'm
buy.
not really going to provide any specific guidance about what that might be. But I mentioned that we might do another
Block
unusually
sell.
large rate increase, but that's not a decision that we've made at all. So we're going to be guided by the data. And I think you can still think of the destination as broadly in line with the June SEP, because it's only 6 weeks old, and sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Hi, thank you. Chris Rugaber at Associated Press. I wanted to ask about, right now there is a sort of growing gap between the Fed's preferred
Block
measure
sell.
of inflation, the PCE index, and the one that's followed by the public, the CPI, of course. How do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE
Block
because
buy.
we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together. We were given the
I'm gonna
importance
get
in the
smoked
public
both
eye of
sides.
CPI. We are calling it out and noticing it and everything like that. But remember, we do target PCE. That is because we think it's a better measure. They will come together eventually. The typical gap was really about 25 basis points for a very long time. And if it got to 40 basis points, that would be very noticeable. Now it's much larger than that because of the things I mentioned. So we'll be watching both, but again, the one that we think is the best measure always has been PCE, at least since I think we, some 20 plus years ago, moved to PCE.
Block sell. Block sell.
I'd like to weave a couple of things together, Mr. Chairman. Michael McKee from Bloomberg TV and Radio. You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus
Block buy.
programs and
Took
you
my
mentioned
stop and
consumer
draft.
spending, business investment have
It
slowed.
killed everybody,
Are they
man.
moving at a pace you would expect, or is demand still greater than supply, too much greater than supply, that you need to do significantly more? And I ask because there are lags in the impact of monetary policy, as you mentioned, and a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak.
Today might be our
do you
worst
know
trading
where
session
you
ever.
are and where you think you need to get to?
Well, just talking about demand for a second, as I mentioned in my remarks, I think you pretty clearly do
Block
see a
buy.
slowing now in demand in the second quarter. Consumer spending, business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make sense and might have been misleading in terms of the overall direction of the economy. Not true of the second quarter, but at the same time, you have this labor market. So there are plenty of experiences where GDP has been reported as weak and the labor market is strong.
Block buy.
And the economy has gone right through that and been fine. So that's happened many times. And it used to happen, if you remember, in the first quarter of every year for several years in a row, GDP was negative and the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is, though, we think that demand is moderating. We do. How much is it moderating? We're not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter. that is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see demand running
Block sell.
below potential for a sustained period to create slack and give inflation a chance to come down.
Hi, thank you, Chairman. Nicole Goodkind, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment before it pauses or begins to think about cutting rates?
So I think you're already seeing, you've seen in the labor market, what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims for uninsurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating. Not so yet from the other wage measures, and we'll be getting the Employment Compensation Index measurement, I think, on Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say and also anecdotally, you hear much, the sort of level of concern on the part of businesses that they simply can't find workers is probably down a little bit from what it was, say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving back into balance. If you look at job openings or quits, you see them moving.
Nothing's working today.
A little bit down, but it's only the beginning of an adjustment. But I think most also, if you look at, I mean, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation, and the household survey can be quite volatile, but it has no jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply, not so much. We have been disappointed that labor force participation really hasn't moved up since January.
Assholes.
That may be related to yet another big wave of COVID, and there's evidence that that's the case. But so we're not seeing much in the way of labor supply. Nonetheless, I would say some progress on demand and supply getting back in alignment.
How much weakness would you be willing to accept before you think about pausing rate cuts?
So I think we're going to be looking at inflation as well. We as I mentioned, we need to see inflation.
Block buy. Block buy. Block buy.
Inflation is going to get back.
Block sell.
Look at these assholes, man. Look at
Block
them.
buy.
Avoid doing. That really needs to
The
happen.
last,
But we do think, though,
they
that the
just
labor market
know
can
when you give
adjust,
up.
because of the huge overhang
They know.
of job openings.
They know.
Of excess demand, really. There should be able to be an adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the ratio of vacancies to unemployed is just out of keeping with historical experience, and that suggests that this time could.
You can easily make money fading me.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how do forecasts of possible recessions from banks and economists, how does that make a soft landing you've talked about more difficult?
So as I mentioned, it doesn't seem that the U.S. economy is in recession right now. And I think you do see weakening, some slowdown, let's put it that way, in growth, and you see it across some of the categories that I mentioned. But
let's just try to scale in. We're wrong at above 32.
So overall,
let's see if we can get
in all probability,
top.
Demand is still strong.
Expensive game.
And the economy is still on track to continue to grow this year. But the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, what was a lot?
Forecasts. How do bank forecasts of possible
block
recessions?
buy.
Does that affect the soft landing?
Well, we've said since the beginning, I think, that having a soft landing is what we're aiming for. Of course, that has to be our goal. It is our goal. And we'll keep trying to achieve it. I do think events, at the beginning, we said it was not going to be easy. It was going to be quite challenging to do that. It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment, as you would expect in the ordinary course, because frankly the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who is really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing. Nonetheless, it's our goal to achieve it, and we'll keep trying to do that.
Thank you, Mr. Chairman. Jean Young with Market News. I wanted to ask about the balance sheet reduction program. It's been working for a couple months now and in a different environment than the last time the Fed did it. What are you learning about how it's working and how markets are reacting? And is reaching the minimum level of reserves needed in the system still several years away at the current pace?
So we think it's working fine. As you know, we tapered up into it, and in September we'll go to a full strength.
Tell them you are
and the markets seem to have accepted it. By all assessments, the markets should be able to absorb this, and we expect that'll be the case. So I would say
markets to absorb this.
Broadly on track.
Markets immediately ticking down 20 ticks.
Trades don't settle until
you cannot make this up.
They'll be picking up steam. So, and I guess your second question was getting the process of getting back down to the new equilibrium will take a while, and that time it's hard to be precise, but the model would suggest that it could be between 2.5 years, that kind of thing. And this is a much faster pace than the last time. Balance sheet's much bigger than it was, but we looked at this carefully, and we thought that this was a sensible pace, and we have no reason to think it's not.
Come on, break 18, man.
Hi, Chairman Powell. Brian Chung, Yahoo Finance. Looking at financial conditions, it seems like the tightening has slowed as of late, with the 10-year coming down, 30-year fixed mortgage rates also going a bit sideways when we talk about a hot housing market still. Just wondering if you find financial conditions tight enough, especially as you continue to raise rates.
So a big piece of that is inflation expectations, break-evens coming down, which is a good thing. It's a good thing that markets do seem to have confidence in the committee's commitment to getting inflation back down to 2%. So we like to see market-based, readings of inflation expectations come down.
Block sell.
Broader financial conditions have tightened a good bit. I mean, the way this works is we set our policy, and financial conditions react, and then financial conditions are what affects the economy. So, and we don't control that second step. We're just going to do what we think needs to be done. We're going to get our policy rate to a level where we're confident that inflation will be moving back down to 2%. Confident. So that's how we're going to take it. And of course, we'll be watching financial conditions to see that they are appropriately tight and that they're having the effect that we would hope they're having, which is to see demand moderate and inflationary pressures recede and ultimately inflation come down.
Sell it all on the bait.
Block sell.
Thank you, Chair Powell.
Block buy.
Watch. I wonder if you can go back a little bit in time to before there was this outbreak of inflation, when the committee put in place forward guidance on tapering asset purchases. I think it was December 2020. There's a recent speech by Fed Governor Waller talking about that and saying that maybe that was too tight, that kind of condition, and it put you a little bit behind. Not his words, but maybe
block sell.
We're kind of late to react to some of that inflation. So could you talk about that decision, and have you looked at it in hindsight at all? Thank you.
So yeah, we said that we wouldn't lift off until we had basically achieved our dual mandate goals. And the reason we did it in real time was that the first look at the new framework that we'd rolled out. Plenty
Block
of people
by.
are saying, it's not credible, you'll never get
It's a big
inflation
hit.
to 2%. Some of our critics now who say inflation is too high were the same ones who were saying you'll never get to 2%. Well, but anyway, that's what happened. So we thought we needed to really make a strong statement with that. It wasn't part of the framework. The December 20 guidance was not part of our overall new framework. It was just guidance that we put in place. So I would say two things. One, I don't think that has materially changed the situation. But I have to admit, I don't think I would do that again. I don't think I would do that again. Ultimately, the situation evolved in a highly unexpected way for all of us. And, maybe the learning is that leave a little more flexibility than that. But did it matter in the end? If you look at, I really don't think it did. I'm not sure it would have mattered if we'd been raising rates 3 months earlier. Does anybody think that would have made a big difference? I mean, lots of central banks were raising rates 3 months earlier, and it didn't matter. I mean, this is a global phenomenon that's happening now. Admittedly, different in the United States, but anyway.
Just a lot of people talk about that time, and they talk about a taper tantrum that I know you haven't talked about it too much, but that you were worried at the time about repeating that taper tantrum that you had experienced as a governor. So was that part of that? Where did that fit into all of
Block
this?
by.
Thank you.
So I think we learned there have been multiple taper tantrums, right? So there was the famous one in 2013. There's what happened at the December 18 meeting where markets can ignore developments around the balance sheet for years on end and then suddenly react very sharply. So we just had developed a practice of moving predictably and doing it in steps and things like that. It was just like, that's how we did it.
Let's see if we
And so
can
did it that way
get
this time. We were
4007,
careful to
4000,
take
break
steps
4010
and
again.
communicate and all that kind of thing. We were trying to avoid a tantrum because they can be quite destructive. They can tighten financial conditions and knock the economy off kilter. And when it happens, you have to really in both 13 and 18 really had consequences for the real
Anybody
economy,
else getting smoked, or it's
2,
just
3, 4
me?
months later. So we were trying to avoid that.
We're down
That was part of
almost
it.
like
Again, I don't think
$1,800.
that's the real issue of 2020 and 21 was just
I'm
trying
playing
to
with
understand
fire,
what was
right?
happening with the reopening economy. That was where the big uncertainty was, and our view was that these supply side issues would get better, that people would go back to work, that labor force participation would come back, everyone would
Block
get
cell.
vaccinated, schools would open.
Come on, take
kids would
19.
be in
19 becomes
school,
resistance.
and
It's
labor
going to be
force
fun.
participation would jump
Fuck
back
off.
up. That's what that was
Straight away
pretty
bounces
very
from
broadly thought to be the case. These supply
Trying
side
to
issues
scalp
would get
my way
solved
to flat.
reasonably quickly, and they just haven't. They still haven't. So that's really the learning, I think, is around how complicated it is.
Bonds had a spike and now back to the low volume area. Let's see if they find support.
And so that's really what accounts
If this
for the
breaks,
pace at which we
goes
moved.
over
And, we
this
did- when
consolidation
inflation
and starts pushing
changed
down, it'll be
direction,
fun.
really, in October, we've moved quickly since then. I think
This
people
guy
would
wants
agree.
to buy.
But before then, inflation was coming down month by month, and we kind of thought we had the story, probably had the story right. But then I think in October you started to see a range of data that said
Sellers
this
are
is a
so
much
shit.
stronger economy and a much higher
Arjit
inflation
Sahota,
than we
it will
predicted.
come down to
Again,
19,
pivoted, and
39.90.
here we are.
I hope so.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I just want to pin you down a little bit more on the issue of recession.
Does it look like
so if we
it,
get
though?
a negative GDP number
I'm mentally
tomorrow
giving
for
up
the
on
second
shorts
quarter,
right now,
would the
which
Fed
probably means
consider
they're
the
gonna
US
work
in
now.
recession? And just remind us, what is your definition for the start of a recession?
So the Fed doesn't make a judgment on that. We're focused on the dual mandate and using our tools to achieve maximum employment and price stability. We don't say there is now a recession, that kind of thing. So that wouldn't be something we do. We would look at the data tomorrow, and
Block cell.
no doubt we'll look at it very carefully and draw whatever implications we can. As I mentioned, though, if you think about what a recession really is, it's a broad-based decline across many industries that that's sustained for more than a couple of months, and there are a bunch of specific tests in it, and it just
The wall
doesn't,
is
it
so
doesn't seem like
shit.
that now. What we have right now doesn't seem like that, and the real reason is that the labor market is just sending such a strong a signal of economic strength that it makes you really question the GDP
Block
data.
by.
But again, that's not a decision that we make, and we won't reach a conclusion one way or another on that.
Thank you very much. Simon Rabinovich with The Economist.
Block sell.
You said that some softening in the labor market is needed. Within the Fed, there are staff economists who've argued that NIRU, the non-inflationary rate of unemployment, might be as high as 5 to 6% right now, which obviously is a lot higher than the current rate of 3.6. What's your assessment of NIRU? Is that something that came up in discussion with the committee?
So I think broadly, a lot of economists think that the natural rate of unemployment will
Block
have moved
by.
up
Just would not die.
to some significant extent above where we
Give
think it
me
was
30 to
before.
short.
And the reason is it's the usual
Block
matching
sell.
issue where
That's
Block
what my
sell.
target was when I
less
bought
effective and
12.
that kind of thing when you have a
And then
kind
they
of
just,
turbulent
like,
downturn,
stop.
big
Block
switches
by.
in demand from services to goods and all that. So it could be higher, and my
Block
own
sell.
instinct is
Block
that
by.
the natural rate of unemployment is higher. Of
Okay,
course,
this
I
is
would
now
add that
bullshit.
We don't know it. We can never know where these star variables are in real time with any confidence, but I would say it must have moved up materially.
That's it.
But the other side of that is, as all these jobs
Maybe
get
one
created and
more
people go back
spike.
to work and unemployment is so low, I think you could, in principle, you could see it coming back down pretty significantly. And that would also, by the way, take pressure off of inflation, because it's that gap. It's the gap between actual unemployment and the natural rate that really is relevant for, the negative slack we have in the economy by the overtight labor market. So if you were to, you wouldn't observe this. It's an unobservable, but you could actually be seeing inflationary pressures coming down if that does happen. And we don't control that, but that's something that logically, if the pandemic and the disorder in the labor market cause the natural rate to move up, then as the labor market settles down, in principle, you should see it move back down.
Block sell.
Thank you, Chair Powell. Jeff Cox from CNBC.com. Just a question about, hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists, pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession, we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them now that you feel confident in your forecast going forward and the Fed is ready to respond to a potential downturn in the economy?
No, all I've really said is I don't think it's likely that the U.S. economy is in a recession now, and I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. Going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing, by which I mean a landing that doesn't require a significant increase, a really significant increase in unemployment. We're trying to achieve that. I've said on many occasions that we understand that's going to be quite challenging and that it's gotten more challenging over recent months.
Thanks,
Block
Chair
sell.
Powell. Kyle Campbell with American Banker. The FOMC has historically tried to avoid the kind of rapid monetary policy tightening that has happened so far this year. How concerned are you that the rate hikes that we've seen thus far might increase risks to financial stability, not just domestically, but globally?
I'm as bad a trader as Popo as it.
I mean, there are precedents for the FOMC moving very quickly. For example, 1994, 1980, even more so. So we've been known to do that when it's the appropriate thing to do, and this year it clearly is. I would say that given how quickly we've moved, I'm gratified that that basically markets have been working, they've been orderly. There's been some volatility, but that's only to be expected. For a financial stability perspective, You know, asset values are down, which in some sense lowers vulnerabilities. It's when they're really high that you would worry that they're vulnerable to a fall. Actually, many asset
Block
values have come
buy.
down.
Block
I think
buy.
you've got a well-capitalized banking system. I think you have households are generally in about as strong financial shape as they've been in a very long time. Or
Block
perhaps
sell.
ever, given what the money that's on people's balance sheets, and so you have a pretty, from a financial stability standpoint, you have a pretty decent picture. Now, the there are plenty of macroeconomic issues that don't rise to the level of financial stability concerns. By financial stability, you know, we think of that as things that might undermine the working of the financial system. So
Block
big,
buy.
serious things. That's not to say that people at the lower end of the income spectrum aren't suffering, because they are. They're suffering from high inflation. They're going to to the grocery store and finding that you know, in many cases their paycheck, it doesn't cover the food they're accustomed to buying. We're seeing actual, you know, real declines in food consumption, and you know, it's very concerning. It's very unfortunate, and that's why we're really committed to bringing down inflation. One of the reasons.
Go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. I can remember when you held your first news conference and you vowed to be a very plain-spoken chairman, and we're thinking today about the impacts of Fed policy on individuals as well. What would you say to individuals or households who may yet lose their jobs in this tightening cycle in the fight against inflation as they try to translate what Fed policy means to them in this complicated economic landscape?
Yeah.
Thank you.
So I guess the first thing I would say to every household is that we know that inflation is too high. We understand how painful it is, particularly for people who are living paycheck to paycheck and spend most of that paycheck on necessities such as food and gas and heating their homes and clothing and things like that. We do understand that those people suffer the most. Middle class and better off people have some resources where they can absorb these things, but many people don't have those resources. So, you know, it is our job, it is our institutional role. We are assigned uniquely and unconditionally the obligation of providing price stability to the American people, and we're going to use our tools to do that. As I mentioned, there will be in all likelihood, some soft market conditions. We need growth to slow to below potential growth. We don't want to you know, we don't want this to be bigger than it needs to be, but ultimately, if you think about the medium and longer term, price stability is the thing that makes the whole economy work. It's what can give us a strong labor market and wages that aren't being eaten up by high inflation. If you talk to people, again, people who are making, you know, wages, relatively low wages, they're the ones who are suffering the most from inflation. So it's all the more reason why we need to move on this. Thank you very much.
Block buy.
It's over, PTM says.
Block buy. Block buy. Block buy. Block sell. Block sell. Block sell.
This stream is gonna work like trades by Matt. I lost $5,000 in a day.
Block buy. Block buy. Block sell. Block buy. Block buy. Block buy. Block buy.
There we go. Full max position size.
Block sell. Block buy. Block sell. Block buy. Block sell. Block sell.
All you had to do
Block
was just fade me. You'd all be rich. I'm gonna have to close the stream in 5 minutes. I just got some business to do.
Block sell.
Look at these monies. 4,000.
Block buy.
Okay, BDM, see you, man. Next time I'll let you know if I plan to do another one.
Block buy. Block sell.
Ah. Of course.
Block sell. Block buy. Block buy. Block sell.
I'm gonna leave the stream open and I'm gonna take off. Let's see where we close at. Just for fun's sakes. What happens to our big lot FOMC trading?
Block sell. Block buy. Block sell. Block sell. Block sell. Block buy.
I'm gonna leave the stream on, but I'm gonna take off. I'll
Block
go
buy.
I'll shut it down remotely at the close and see where we close at. Hey guys, see you guys.
block sell, block buy, block sell, 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 block buy, block sell, block buy, block sell, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block sell, Block sell. Block sell. Block buy. Block sell. Block sell. Block sell. Block buy. Block sell. Block sell. Block sell. Block buy. Block buy. Block sell. Block sell. Block sell. Block buy. Block sell. Block buy. Block sell. Block buy. Block buy. Block buy. Block buy. block by, block by, block by, block by, block sell, block by, block by, block by, block by, block sell, 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 block buy, block buy, block sell, block buy, block buy, block buy, block buy, block sell, block sell, block buy, block sell, block sell, block buy, block sell, block sell, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block buy, block buy, block buy, block buy, block sell, block buy, block buy, block sell, block buy, block sell, block sell, block sell, block sell, block buy, block sell, block buy, block sell, block buy, block buy, block buy, block buy, block buy, block sell, block sell, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block buy, block sell, block buy, block sell, block buy, block buy, block buy, block sell, block buy, block sell, block buy, block buy, block buy, block buy, block buy, block sell, 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 block buy, block buy, block sell, block sell, block buy, 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 block sell, block sell, block sell, block sell, block sell, block buy, block sell, block buy, block buy, block sell, block sell, block sell, block buy, block buy, block buy, block buy, block sell, block buy, block buy, block sell, block buy, block sell, block buy, block sell, block sell, block sell, block sell, block buy, block buy, block sell, block buy, block sell, block sell, block sell, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block sell, block buy, block buy, block sell, block sell, block buy, block buy, block buy, block sell, block sell, block sell, block sell, block buy, block buy, block buy, block by, block sell, block sell, block by, block by, block by, block by, block sell, block sell, block sell, block sell, block sell, block by, block sell, block by, block sell, block by, Block sell. Block buy. Block sell. Block sell. Block sell. Block sell. Block buy. Block sell. Block buy. Block sell. Block sell. Block sell. Block sell. Block buy. Block buy. Block buy. Block buy. Block buy. Block buy. Block sell. Block buy. Block sell. Block sell. Block sell. Block sell. block sell, block buy, block buy, block sell, block sell, block sell,
Connection lost.
Block sell. Block sell. Block sell. Block sell. Block buy. block by, block sell, block sell, block by, block sell,
Hello. Is anybody here? I'm back. What a ride. This is account blowing stuff. What I did today. Is anybody here? I want to appreciate if anybody is on the stream right now apart from me. Because you sat through all this bullshit. Oh, let me turn my phone on. One person watching, you can ask me anything. Anything you want to ask me, you can ask. What do we have here? What a day. What a day. It's 4 o'clock. Okay. I'm back. I am back. It's not a trading account. No pressure today. What do we have going? Markets closed. Gamblers. Log out. What do we have going? Okay. Tick tock tick. Total control. Hello.